Should people still be expecting new lows for Bitcoin, or are they holding on to old bearish narratives which have died out? These are questions we're going to go ahead and answer in today's video, discussing it from a macro and short-term perspective. Let's get into it. Okay, MegaWhale team, welcome back to the channel today, guys. I hope you're all having a great day. We have such an interesting video today, guys. In today's video, we're going to be breaking down the bearish narrative in immense detail. We're talking it from a political standpoint, an economic standpoint, a societal standpoint, but of course, looking at the charts, looking at the data, outlining the probabilities, giving you guys all of the information you need to make up your minds yourself. Before we get started, go ahead and smash the like button, hit the comment button, and of course subscribe to the channel, guys. We do daily videos on Bitcoin, traditional markets, technical analysis, structural analysis, everything in between. No BS, no shilling, no emotions, pure hard technical data and facts. You can also find us on Telegram, the second link down below. You got access to charts, updates, videos, analysis, information, educational posts, news events, everything you need to stay in tune with the market is in this channel, guys. Second link down below. If you're interested in joining the VIP channel, where you'll get access to explicit trade signals, entries, targets, stop losses, such as that one, you'll get access to shorts, you'll get access to longs, you'll get access to exclusive updates and charts. You'll also get access to our group chat, where we have a trading channel, we have a general group chat, and extra videos all in here. Contact me via the pinned comment in that free channel, guys. You can go in and get access to that. Let's get into a video, guys. And of course, I'm going to start off with the opening statement. The bearish narrative died out quite some time ago. However, the possibility for new lows is still there, although it is diminishing rapidly and it is very, very small. A quick summary, guys. On the higher time frames, we saw Bitcoin basically enter an extended bear market. We had a pretty traditional bear market in terms of length. It was around about 17 months, around about that time. We saw a pretty decent bear market here from September all the way down to about January 2023. Okay, so basically the entire of 2022 was a bear market. The bear market was represented by this descending channel formation. This descending channel formation broke out at the end, and we saw a breakout of this descending channel formation from what we call a falling wedge. We had a falling wedge structure over here with descending trend lines that converged at the end. What this reflected was decreasing volatility, decreasing momentum, okay, decreasing volume, decreasing liquidity, all at the end of an aggressive downtrend. That was a sign that the bottom was in, as it was a bullish reversal structure, and the data and the price action data suggested bullish consolidation at the end of a downtrend, thus a reversal. We have now seen a reversal from there, and as we have said, guys, we bought Bitcoin at 18,000, we bought at 16,500, and we bought at 19,200. We've held onto our spot bags. We have not sold because we do believe the higher time frame trend is upwards, although we've been saying we do expect a short-term pullback down to these levels, which we'll talk about today. We do still expect that. However, we are aware the macro trend is still up, and the bearish argument is diminishing for new lows and is continuously diminishing for new lows as we push higher and higher. And $30,000 is going to be the trigger point where the bearish argument basically disintegrates into a zero probability or an incredibly small probability. Until we break above 30,000, there is still a degree of probability for the bears to come and take the price to new lows, although it will rely on a few external factors, which we'll talk about in today's video. So a quick summary, guys. Let's get into the data, let's get into the traditional markets, and come back and talk about all of that cool stuff next. So how is the data looking like? Let's take a look at the current data. We are down 15.74% for the 24-hour volume. We are seeing 24-hour liquidations down 34%. For the month, we are seeing Bitcoin up 0.51% in April. So far, 5 days in, not a lot of price action, more or less holding pretty steady. If we're looking at total volatility for the 30-day period, we are still seeing volatility drop down. We are at 3.48%. We can see volatility is starting to plateau and slightly drop down. Not a very good thing, as it does indicate a little bit of weakness, because volatility, as we talked about in the last two videos, is one of the main components of price action. For the price action to move, we need liquidity, we need volume, we need volatility, and we need momentum. If we see volatility drop, well, we know volatility is tied to both liquidity and volume, and we know those components of price action is tied to momentum. So they all kind of interconnect. And when we see volatility drop, it's an indication of momentum is going to be falling. It's an indication that price action is going to be kind of stagnating or compressing. And if we see that occur after a large move up, like we have seen at a resistance, it can indicate a higher probability or a chance that we see a rejection from these points toward the downside. Again, we'll discuss that in today's video. Let's go ahead, guys, and take a look at liquidations in the last 24 hours. Now, it does look like we did see a pretty even spread over the last few days in liquidations. In the last 24 hours, we have seen a little bit more shorts liquidate than longs liquidate. Again, we still have got some nice short profits, so some really good scalping opportunities, but it does look like shorts have been a little bit more in the liquidated end than the longs in the last 24 hours. Traditional markets, we have actually seen the DXY drop, and we saw the DXY drop below that base of support, which obviously isn't a good thing. The drop below base of support was not a very good thing in the market. Now, there's a few bunch of political reasons why DXY dropped. I'm not going to get into today's video, but we have seen the DXY drop. And of course, if we do continue to see the DXY drop, this could add the likelihood, or I guess increase the probabilities that the markets will rise and Bitcoin will break through a $30,000 resistance, okay? While we are still in this descending channel, the descending channel is still active. We do expect, again, it can possibly retest, but again, the most key level we need to get above for DXY for us to continue upwards and for the markets to massively correct is going to be 103.5. The lower we push down over here, the greater distance between these two support and resistance levels, the harder it is to climb up and break, okay? So the most ideal zone for a breakout was here. For a push up, we failed to even get there. We came back down. Next attempt is going to be even harder to breach through this resistance level, okay? Moving on, guys, to the S&P 500 and Dow Jones. You can see the S&P 500 here. We came up, we perfectly tested that upper resistance range, a first rejection point. Look for rejections at this point in S&P 500 again, as S&P 500 is at resistance and Bitcoin is at resistance. These are good indications that the market could move together and potentially down. So we're looking for rejection points here on both of these markets. Again, if we do break through a solid resistance over here, we can expect a rally to 4,300. And again, the S&P 500 and we're looking at Bitcoin. They are correlated to about a 70% degree. And again, in the last few weeks, few months maybe, that correlation has been stretched, and it is normal to stretch in the correlation. And I'm going to explain that in just a moment. But we have seen the correlation stretch a little bit, and there's a logical explanation to that, a very understandable explanation to that. And it's not because Bitcoin is finding independence. It's got nothing to do with that. It's got to do with the beta and the volatility of these asset classes, particularly after large drops. We'll come to it in a second. Looking at the Dow Jones, we have seen the Dow Jones push up. We have seen a nice base of support create over here. Again, a loss of the support could send it back downwards. However, until that support's lost, support is support, until it's not, we do expect a continuation upwards. Sorry, my next little thought today, guys. Particularly if the DXY does actually drop down. So really quickly, guys, the DXY, cryptocurrency and stocks. A lot of people are saying Bitcoin's decoupling, finding independence, and I would argue against that. If we look at the overall correlation between the stock market and we look at cryptocurrency, we can see that there is a degree of 0.7 correlation. We have a correlation coefficient, but we also can see the estimated return, all right? The estimated return and risk-free rate for both of these asset classes are different, okay? 30%, 20%, we can see the risk-free rate on these asset classes and the beta are completely different. This indicates that cryptocurrency is a more volatile asset. Now, in periods of large drawdowns in the economy, which we have seen in the bear market coming out of it into reversals, a more volatile asset is going to bounce more aggressively and more faster than a less volatile asset. And that's why we've seen cryptocurrency massively outperform the stock market, not because it's decoupling, not because it's finding independence, it's because it's a more volatile asset in comparison to the stock market. Okay, guys, it's all about the comparison between the two. So I wouldn't go and say Bitcoin's decoupling. No, because Bitcoin still does rely on the US dollar, because what ties these two asset classes together is the strength of the dollar, right? The strength of the United States dollar, the USD dollar, ties these asset classes together. So to say that cryptocurrency is decoupling would mean that it's breaking the bond it has to the USD, which means it's breaking a secondary correlation, and that's not actually possible in a financial market. So Although it makes sense and it's a nice thing to say, when you actually technically look at the specifics about it, it doesn't really add up. Now, there are reasons to why assets can move more aggressively than others. We can look at economic, we can look at societal, and we can look at political reasons. For example, we can see a 0.7 degree correlation stretch upwards or downwards based on societal influence. How is society perceiving this asset class in times of turmoil? For example, banks were falling, okay, and that gave a precedent that Bitcoin was a safe haven and the market pushed Bitcoin up. So societal influences can actually affect individual asset classes within the risk asset market and not impact the others at the same time. While they both move upwards, the other one's more volatile, it moves up more. So I wanted to get it out of the way, but we'll talk about why, again, in today's video, we're talking a lot about why new lows are less likely, why we're not really going to see new lows again, and we'll use data to support that. But I'm not just going to look at it from one side, guys. We need to look at it from both perspectives. We're going to give you reasons to why we could see new lows and justify that based on political, based on economic, and based on societal triggers, because all price action moves. Yeah, it moves on momentum, liquidity, volume, all that kind of stuff. Cool, those are drivers of price. But the triggers of movements in direction, the trend, is caused by economic policy. It's caused by political decisions. It's caused by societal perspective. All of these things actually drive money into the market, and then based on how the market is perceiving that, based on how it's receiving that, based on liquidity, volume, etc., will determine how much it actually moves. So we need to look at all of the components of price action when we're talking about the macro charts. So I'm gonna go ahead and start off with a daily support range. Let's just take a look at this, guys. Like we said, the current range is 30,000 is the next major resistance. This major resistance is a yearly low according to the prior bull run cycle. We look at the prior cycles and we see the yearly lows of prior cycles. We can see 30,000 is the yearly low of the 2022 bear market. Every single time we close a monthly candle above that prior low, we never ever close a monthly candle back below it. This can be used as a validation point for higher time frame bullish argument to confirm, and for us to basically say that after 30,000 monthly close, the bearish argument basically diminishes to nothing. Now, not only do we have horizontal structural data to confirm that, but we have volume data and we have technical data. If we take a look, I wanted to briefly interrupt today's video to discuss my favorite exchange, Bitget. If you're looking for a safe, honest, reliable, and accurate exchange, look no further than Bitget. You can sign up by the link in the description to support the channel and get access to 3 exclusive perks. That being up to $5,005 in trading rewards, up to 15% discount on your trading fees, and exclusive access to our MegaWhale promotion campaigns that we run every few months. Alongside that, guys, Bitget is a non-KYC exchange, meaning you do not have to KYC. It is completely optional. Bitget also has a protection fund that secures user assets against external hacks and threats in the space. Alongside that, guys, Bitget offers up to 125x leverage on futures with extensive amount of trading pairs and liquidity on the market. I highly recommend signing up to Bitget. It is the exchange I've been using for over a year and a half now, including all of our members. If you're interested in signing up, trading there, and supporting the channel, you can do so with the link in the description. Thanks for listening. Look at the volume ranges. Let's take a look on the weekly chart at the VRPV. Let's see how much support is sitting between us and a new low. If we're looking at new lows, our next low target will be sitting at 12,000 to 14,000. As per this range on the chart over here, we can see the VRPV, we can see a significant drop off after about 17,000, which is this local low range here. It significantly crashes downwards and it finds support again right at 12,000 to 14,000. So if we do see a new low, the new low target will be 12 to 14,000. Now, if we're looking at our historical support, this area here on the Bitcoin chart is the largest historical support we have ever seen in Bitcoin in the history of Bitcoin, particularly the price range at 19,200. 19,200 horizontal range is the strongest singular horizontal support Bitcoin has ever had in the history of Bitcoin's price action ever, okay? It is the strongest support. For us to say we're gonna go to 10,000, for us to say we're gonna go to 3,000, there are absolutely no data besides emotion and speculation that can explain that right now. You could say, oh, the Feds are gonna do that and that could result in that. Yeah, you could say that, but it's speculative. According to the data in the charts, we have massive support at 25.2, we have massive support at 20 to 18K, and we even have massive support at 17,000 before we create a new low, guys. So look at the chart, okay? We have to break through 25.2, we have to break below 20 to 18,000. Breaking below 18,300 will be the trigger for a potential continuation downwards. We have a whole heap of support over here, and support is support until it is not, okay? So while we're above support, we have to assume that support is going to hold until it is proven otherwise. And that is what I've been saying. I'm not selling my Bitcoin spot bags at this moment, even though we're at resistance. I expect a higher time frame continuation eventually for Bitcoin. And if I am proven wrong, well, guess what? We bought down over here, guys. We got so much support above us before we actually go into a loss. We can take profits at any point. But let's go ahead, guys, and talk about where the new low could be. And we talked about that over here on this chart. We're going to also go ahead and talk about it on the 4-year cycle. Again, according to the 4-year cycle, we have seen a traditional bear market. We have seen a traditional move down of about 12 bars, 13 bars, 12 bars, around 80% in the last bull and the last bear market. The prior one was 80%. And obviously this one, we saw a little bit less. We saw about 76. And the reason we saw 76 again is because monetary displacement. And monetary displacement, the rule of monetary displacement is, as there is more money in the market, it takes a lot more negative price action or selling to bring the price down 1%, okay? You think about the displacement of money effect. If a market cap is 1 trillion, for it to go down 50%, it has to lose $500 billion. The market cap is $1 million, it has to go down 50%, it has to lose only $500,000. It's a lot easier for a market to shave off 82% when the market cap is very small compared to what it is now. So we're going to see diminishing returns as the price moves upwards over time in both the bull runs and the bear runs. Okay, so it's unreasonable to say just because we saw 80% pullback last time, we're going to see an 80% pullback, which is going to take us to 10,000. Although, if we're looking at date ranges and trend ranges, it's a possible target, okay? And that's about the only bit of data that I can see in the charts that could support a move to 10,000 personally. But again, if you look at it realistically and apply the actual, concepts such as the displacement of money effect, it doesn't make a lot of sense to actually occur. So let's take a look, guys, at some possible indications that could result in a new low being formed and could basically send us into a rejection. We'll look at the short term, we'll look at the macro, and then we'll take a look at the technicals indicators on the higher time frame and talk about why there is almost no doubt that we are very bullish, but why we're not in a bull run yet. So on the chart over here, guys, as we've been saying, there's a very low chance we'll create a new low, but there are a few reasons why we could create a new low, and those reasons come back to 3 things: societal influence, political decisions, and economic policy. As we already know, guys, the reason why we have seen such an aggressive move upwards for Bitcoin in the last few weeks, yeah, the banks have collapsed, yeah, that's cool, but the main reason is because we've seen a shift in perceived systematic risk, and systematic risk is a measurement of the overall risk in the market. It's made up of political decisions, okay? It's made up of economic policies, interest rates, taxation policies, all that kind of stuff. Those economic policies drive money from and to assets, okay? It determines how cheap debt is. If the cost of debt decreases or is perceived to decrease, people are more likely to take on debt to purchase income-producing assets that rise in value as a hedge against the dollar, okay? That is why we have seen 2021 bull run so explosive with interest rates, because our cash rates were so low. Now we're seeing interest rates rise, we have seen the markets come down, now we're seeing a potential shift. We've seen the Fed basically announce that they're expecting to pivot because of what's happening to banks. They can't continue to increase the interest rates, because that will put the banks in a very tight position. So we're actually slowing down on their rate hikes. We actually just saw Australia do a 0% basis point hike. They paused, they've essentially paused. Haven't pivoted, but they paused. What that tells us, if we take a look at the expected trajectory of future interest rates, we can predict that the trajectory is down. The future trajectory of CPI and interest rates are down. That gives the market a perceived positive risk factor. Okay, the systematic risk in the market potentially drops, particularly perceived risk, and the markets front run actual risk. The markets move on perceived risk. What is perceived to be the future? If interest rates are going to drop for the next 3 months and pivot in 4 months, the markets are going to start to respond positively. And I've been saying this for a long time, guys. I've used these economic models for a long time. I have a background in finance and economics, okay? I was saying back over here, we do not need to see a pivot for the markets to rally. We do not need to see a pivot for the bottom to be in. All we need to see is the Feds announce a slowdown in rate hikes. That's all we need to see. We need to see a curvature. We need to see a slowdown in rate hikes, because that's going to create a environment where perceived systematic risk drops and the potential for a pivot is there, and that will drive asset prices upwards. So that is one of the reasons why, again, we're more bullish and bearish on the higher timeframes, because the perceived systematic risk is dropping, and that's a fact. One of the reasons we could go to a new low is the Feds now turn around and pivot once more and say, you know what? We're going to increase the rate hikes again. We're going to go 50 basis points. We're going to keep going 25 basis points for another 6 months. We're going to ramp it up again. Inflation's going back up. That could then flip that narrative and drive the price back down. Another one would be political, such as government bans on Bitcoin, government regulations on Bitcoin, on cryptocurrency, which could drive the price down. But if you look at the probability for that, it's quite low, because the governments make money from cryptocurrency, as much as you hate it or not. They actually make a lot of money from capital gains. So why would they block an avenue of income from capital gains? They wouldn't. Okay, they're very greedy with money. They don't do that. Okay, there's the money available. The only reason they want to control Bitcoin isn't to ban Bitcoin, because they want to keep the capital gains. They just want to control the market. They want to know what you're buying and when you're buying it. That's where central bank digital currencies come in. The next one will be societal. If we see something that happens with FTX crash or some major crash in cryptocurrency, another exchange crash that scares people in the market, that could also drag the price down, okay? But from a data perspective, a technical perspective, there's nothing really saying that the bullish argument doesn't have strength. There's nothing really saying that bearish argument has enough strength to bring the price down. However, guys, the short-term price action does suggest we could see a rejection. And just because we see a bearish development on the short term, it doesn't mean it's a bearish macro chart. Time frames very important. I have been incredibly bullish this entire time from 18,000, 16,500. That is why I bought. Why would I buy if I wasn't? But I have been saying, as we approach resistances, I said it many times, I want to say it again, as we approach resistances, just as we approach here, I flip bearish. I said we're going to see a crash. I approach here, I flip bearish. I think we're going to see a crash according to the data. We're seeing momentum drop, we're seeing liquidity drop, we're seeing volume drop, we're seeing everything that we need to see for the price to rise dissipate, okay? There are a few indications that we could see a continuation upwards, such as a break over this short-term horizontal resistance range, this high time frame bullish, plus a RSI breakout over here would confirm a continuation upwards for Bitcoin and potentially break over 30,000. But again, we need to see a monthly candle close above 30,000 to get confirmation on that yearly resistance. A yearly resistance needs a monthly candle close, okay, for confirmation. So even then we don't have confirmation, guys. But looking at the shorter time frame, we can be bearish on the smaller time frame and bullish on the macro. That is totally fine. I've explained why, because we have so much support below us confirming we're still in an uptrend. We'll show you from technical data in a second. But the short term's not looking great. I'm not going to lie. There's no point lying to you. There's no point blowing smoke in your face. While we are in this range, while we were in this horizontal range between our higher time frame bullish trigger and our high time frame bearish trigger, we are bouncing, guys. There's no need to take a bullish or bearish argument on a small time frame. Just trade the ranges. Buy support, sell resistances, short resistances, long supports, over and over, okay? We are seeing the price at resistance, and therefore the probability for a rejection back to your support is higher than the probability for a breakout upwards in terms of your risk return. You got a better risk return for a rejection than you got a better risk return for a long, okay guys? Think about it logically. Now, if we do see a break towards the upside of this horizontal channel, we can see a move potentially to about 19,200 to 30,000. As we can see, the VRPV massively starts to drop off, indicating a low resistance range. For us to see a rejection, that would take us back to 25.2k, which is what I personally expect to see. I would expect to see a 25.2k before we see a monthly close of a 30k. That's what I'm looking for. That's what I'm kind of aiming towards. That's what I believe is developing the charts. We do need to see a 4-hour close below this trend line, below this horizontal support, to see a continuation back towards here, guys. Now, short term develops into macro. So like I said, we're not technically high time frame bullish until we break over the 30k. We could see a pullback back to 25k. That could then get very bad. That could break down here, and that could develop, and that could a downtrend could develop from there. But as of right now, we've got the data. This is what the data is saying. Let's look at the technicals really quickly and then end up the video. On the daily chart, we can see we are above most of our moving averages, right? We are seeing some bearish signs, and the bearish signs are coming from our momentum, such as the RSI, right? We have increasing price, we have decreasing momentum. This is a bearish divergence, but we are seeing that our bearish divergence is running quite thin. The price RSI, particularly if we get the momentum shift over here, this bearish divergence will be invalidated. So if the momentum breaks upwards, this bearish divergence will be invalidated and the price can push upwards. Okay, that is something we're looking out for. If we look at such as the market side of B, we're seeing a very similar thing here on the market side of B. It is suggesting momentum is falling, guys, but we are getting to the point where the consolidation is going so long that if we do break through this resistance again, momentum can still flip towards the upside and this bearish divergence can be invalidated. But it doesn't matter, because if resistance is still there, resistance is still there. That is a factor that matters. So we're looking for a break over 30K still, even if that breaks upwards. It doesn't matter what you think, that is the reality. High timeframes, looking great. Gaussian channel, we are above the Gaussian channel on the daily. We're above the 50 EMA, we're above the small time frame movers. The uptrend is still strong. However, it's strong. It is losing strength. It is weakening as it goes, okay? Looking at the higher time frames over here, guys, on the weekly and monthly charts, starting the weekly chart, we broke into the Ichimoku cloud red zone over here. Again, we have seen that prior. Usually red zone does act as resistance every time we're broken into it prior. In prior higher time frames, we have actually pushed through it, so that is a bullish indication right there. Number two, Gaussian channel, we broke a weekly candle above the midline of the Gaussian channel. Again, every time we have done that prior on the weekly chart, we have actually seen a continuation through the Gaussian channel that could take us up to 40,000. And again, guys, market cipher A, we're looking at the market cipher A here. We are starting to see the smaller time frame moving averages converge over to 50. We do need to see that occur. This is a must. We need to see the smaller time frame moving averages converge over to 50 to signify we are in a strong weekly uptrend. Okay, say it again. We are not in a bull market. We are in a reversal structure. We are reversing. We are not in a strong uptrend, we are on an uptrend. A strong uptrend is required for the smaller time frame mirrors to push over 50, okay? We do need to break over 30,000 as well for a strong uptrend to develop. I'm going to go ahead and end the video. I hope you enjoyed. If you have any questions, leave them down below. Remember, guys, think about it logically. Look at the data. New lows are less statistically probable, but are possible based on societal, economic, and political developments, okay? They can also develop over time if the price does reject strong enough and it does move toward the downside. A lot of these monetary policies will influence price action over the coming weeks. We have CPI, we have FOMC. All of these things have the potential to continue the trend or massively shift the trend. These are things we cannot predict. We do not know how they're going to come out. We do not know what the data is going to be. All we can do is look at the data. There is no point making massive predictions on that. There's only justification in analyzing the charts on each day, making the best decisions you can based on the data you have at the time, and then executing over, rinse, repeat, rinse, repeat, rinse, repeat, okay? Don't sit there and say Bitcoin's gonna go to 40,000 when you can't really prove it's gonna go to 40,000, and then risk your money on something you cannot prove based on data, okay, guys? You have to be objective for trading. You have to be realistic. You have to be honest with yourself. Lying to yourself, saying Bitcoin's gonna $3,000 is absolutely mind-bogglingly insane. There is absolutely nothing to suggest that at all. That is just going to get you wrecked, guys. Trust the people who have been on your side. Trust the people who have given you the data. I'm not claiming to be correct 100% of the time, but I am telling you I will always provide you with the data, and I will always provide you with the possibilities and probabilities so you can make up your own decision, okay? That is it. I'm not going to try to sway your opinion. I don't care what you think. At the end of the day, I make my money. I've made my money. I'm set. I've been investing for a long time, been trading for even longer time. I am completely happy and comfortable doing what I'm doing. I want to help you guys. So focus on the people who actually want to help you, not the people trying to make money off of you. Thanks, guys, for watching. You can go ahead and sign up to all the links down below to support the channel, and obviously join our Telegram channel to get all the access to all of our content, such as educational posts, news events, yada, yada, yada. Thanks for watching. See you tomorrow.